Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Wednesday, October 31st. It's the spooky edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. I missed the Daily Market Commentary yesterday due to the fact that there was a frog in my voice. I'm going to call it a frog in my throat, but in all reality, because it's Halloween, I'm sure that it was an evil spirit. I'm blaming it on an evil spirit. So hope you guys all had a great trading day yesterday as we had a little bit of bullish movement. We're going to do what we do each and every day, looking at the same 10 to 12 futures markets, identifying potential breakout trades and turning points from an educational perspective. So let's go ahead and dive right in. First of all, on the S&P. So looking here at the ES, we have a little bit of a rally. We're up about 13 points this morning, about half a percent. And you know, this move down that we had is, you know, we've seen prices start to come back up. Now, I will tell you on a 4-hour chart, though we've gotten a little bit of a base build, I don't have a higher low and a higher high yet. I need that higher low and that higher high to change my overall directional feeling. And it reminds me kind of what happened earlier, right? Earlier in the month, we had, you know, a couple of days of really strong movement, and then that just set up for a nice fall. And you know, when I look at this as potentially another short covering rally. Until I've gotten something else that tells me otherwise, I'm going to leave it kind of in that realm. When I look at the hourly chart, though, so this tells me that I'm still more of a seller than I am a buyer overall. I've got an area that I like up here for a potential reversal, but this is a confirmation style entry if price does indeed make it back to this level. Now, is there something to trade until we get to that level? Well, there kind of is. If you're so inclined, you could take a long above this area. I actually like, you know, this is setting up for a potential short coming back down below here. It's not there yet. So I'm actually going to make this a dashed line setup, meaning I'm not going to just take this if it comes back down. I had a little bit of basing here, which I like. I'd like to see us bounce off of here once and base a little bit and then drop through it. I think that would be the best opportunity for a short. So keep that area in mind. 2681.5 as a potential breakdown area. But like I said, I'm putting a dashed line there because it's a little bit more. I want to see how we approach that level. Right? With a breakout trade, I want basing just before the level. Without the basing before the level, my probability is a bit lower and my risk is a bit higher. So I'd want to see some basing before this breakdown in order for me to get to be willing to get short on that. In the NASDAQ, the NQ, we still have our reversal area up here. Most of my areas are still net short. We did bounce off of this 4-hour level. Now, if you take a look at this, I typed this in the Twitter feed yesterday. So if you're not watching the Twitter feed, please make sure that you do. That this was a reversal point. Now, in our for those of you that are Traders Army subscribers, we had in our trade feed, we got long a bull call spread on the Qs. So if you are not an options trader, why aren't you one? But because this level was so wide, it made more sense to do the options trade in this particular example. So the bull call spread on the Qs that we got long is running up pretty nicely. But we're cautiously, you know, moving that stop up. We hit target 1. We're cautiously moving that stop up simply because we overall are still net sellers in the NASDAQ and in the S&P. So since I'm still a net seller, I'm looking for an area where we could get a reversal. Now, there is a potential reversal area up above us. I'm not going to leave these lines on here because this one is, you know, but this is a potential reversal area right in through here. This was right around a market open. So anytime you're around a market open, you're going to have a little bit more strength. So just keep in mind, and it's whole round number resistance. So, you know, now, is there room to do stuff up until there? Absolutely. So keep that area in mind for today. So let's move over and take a look at crude oil. Now, crude oil, we had a potential breakout trade, and I want to talk about this breakout because one of the important things about a breakout is the basing before the level. Basing before the level is something that I take very seriously on a breakout trade. So we had a breakout set up on crude oil, and I really felt pretty good about this breakout. We had touched it once, but my rule is I want a three touches before a breakout, and I had gotten one touch out of it, but no other real touches. Now, we got that one touch, no other real touches, and then this was a straight down move. So even though we came below the level, it didn't follow the rules of basing before the zone. I actually didn't get in on it. Now I will tell you, when I saw price coming down below it, I felt like I had missed the trade, but I was okay because I didn't take it because it didn't base before the level. Now, for those of you that are a little bit more aggressive, this does set up for a potential short. And by the way, it still is if you wanted to. There's no, if you did get short that, let me put this line back on, you're not stopped out yet. Because technically, if you take a breakout below this area, your stop has to go up above here. That's a really wide stop for a lot of traders, right? You're looking at a point and a half, which is about $1,500 for one contract. For a lot of traders, that's going to be a little too rich, but those are the rules on a breakout. I've got to take it above the prior pivot. So on this crude oil breakout, in looking at this, without the base before, it made the reward to risk really unnecessary, and it didn't set up for a good opportunity. So I'm going to remove this one because we didn't get the breakout. We didn't get the basing before the breakout. But technically, you could still have shorted it and could still be in it if you're following those rules. If you chose not to, then I think I'm still a net seller of oil. I don't have a higher swing high yet. I will say that our momentum to the downside has slowed down considerably. So if I put my momentum indicator up, you can see that our momentum to the downside has considerably slowed, right? As I'm getting much higher swing lows and the same swing lows in price. So my downside momentum is slowing down considerably. So that is something to consider. For now, I'm not going to really add anything to the charts. There's really nothing I want to add. I want to kind of leave this be and let's let it settle out a little bit. Now, gold. Take a look at gold. Now here we got just a little bit of basing just before the level. So we've broken down below the level. Now, my only rub so far on this one is if you shorted it, great. Take your stop, move it to break even. This one gave us, a few touches here. This one was not an ideal breakout setup either. But we did get a little bit of basing before the level right in here. Price came down, so your stop would be up above here. Now this is up above that base. Now we've broken below it, but we've gotten 1, 2, 3, 4, 5, 6, now 7 candlesticks of almost no movement. Typically, one of the things I want to see is I want to see strong movement away from a good area. And if we haven't gotten strong movement yet, are we going to get it? That's my fear. And so I'm thinking that if you're in this thing, take your stop, move it to break even, so you don't take any losses at this point. If you're not in it, I don't think it's a time to get into it. I think you've got a better opportunity potentially on a reversal. And the reversal could just be this reversal up to here. Now, the thing I don't like about it is when it was formed. It's not formed at a great area, so you'd have to go a bit higher on the reversal. And so you could use this area here for a potential reversal, but you got to wrap it around that whole area a bit wider. A little bit of this basing here, a drop, and then this little tiny one here before a drop. Now, this little tiny one here formed at 9 p.m., fairly weak at that point. So it's up to you as far as if that's one that you'd be willing to take the risk tolerance on. I'm not sure that I would, especially if I've got some demand down below me that are going to stop me from falling. All right, let's move over to bonds and currencies. So in the bonds, we're coming to a potential confirmation style entry down here in this region where we've seen prices come back to. Couldn't get the word out of my mouth. We've seen prices come back to here, and the bonds are actually running pretty much inverse of the equity markets now. Since we've seen a little bit of strength in the equity markets the last couple of days, we're seeing the weakness in the bonds. Right? It's just the bond and equity inverse relationship is pretty present. But we moved this to a confirmation style entry because we almost came into it once and moved away, which weakens it. So now we're in a confirmation style entry for a potential long right here. In the Aussie, I had a potential long breakout above this area here. Now, this one I did take. We hit it once, twice. We base. This was a nice long basing before there. We popped up through it, and I said, "Oh yeah, here we go." And then take a look. 1, 2, 3, 4, 5, 6. So 6 candlesticks of really basically no movement, just like I kind of talked about earlier. And then we collapsed out of the level. And so this is an example of just a failed breakout. And there's going to be failed breakouts, right? You typically have failed breakouts occasionally, and this is one of them that did. So it's a good lesson to be, well, actually, there's not a whole lot of a lesson to be learned here. I'd love to say that there's a great lesson to learn and not to do. No, this is just a failed breakout. I followed all the rules. I did everything I was supposed to do. When I took the breakout position, my stop was down below this area here. So I just got stopped out. There's no ifs, ands, or buts about it. My stop was actually, I want to say it was 70.88. So it was below this area here is where my stop was. So I got long on the breakout here, and I followed my rules. My stop was below the last prior pivot, hoping to get a nice little run up to this region here. And we came up, and it just chopped around, and then eventually came down and stopped me out. That's okay, by the way. I have nothing wrong with being stopped out of a trade. That's c'est la vie, as they say, because I'll live to fight another day. Take a small loss. I think that was a couple $100 on one contract. So if you took 2 or 3 contracts, you're not blowing up your account, even if you do 2 or 3 contracts. But I was looking for a 4-to-1 reward to risk trade on that one. So you don't have to be right all that often to do okay. So that's a good one to learn about management. There's nothing to learn from the trade because sometimes levels just don't work, right? No matter what rules we follow. You're not always going to get the level to work out. And that's one of the things that for a lot of newer traders is the most frustrating, right? My wife is an engineer. And so, she's an engineer by training. She's a stay-at-home mom, which is way harder than being an engineer, by the way. But my wife is an engineer. And as an engineer, when you do X, you expect Y, right? If I do X, Y should occur with 100% certainty because those are the rules. Yes, but in trading, it doesn't work that way because there's always the human element on the other side of the trade, which we don't know why they're buying or selling when they're on the other side of our trade. So all we can do is follow the rules with the greatest degree of probability. And it's not always going to work. And this is a good example of that. All right, next, the euro. So in the euro, we had a reversal area up here. We did not come close enough yet to do anything with it. So I'm going to leave this area kind of intact in the euro. On our 4-hour chart of the euro, we are still definitely a net seller. And so I would look a bit higher to see is there a reversal point. Right now, there's nothing I'm in love with up above me. If we do get a little bit of a rally up, and there's no reason for a breakout at the moment. I don't like any of these levels because they're all pretty wicky. I say the word wicky because there's just these upper wicks. And so it's not really giving me a great setup. Nothing I'm in love with. Oh, hit the wrong button. Sorry about that. It'll take a second to turn that thing off. All right, next, Canadian dollar. Now, in the Canadian dollar, I'm kind of looking at this as a potential breakout area. And we have a little bit of buying opportunity with this move up. Well, we hit it once, got a little move out of it. Hit it a second time, got a little move out of it. And now we're kind of chopping. When I looked at it yesterday, I drew this triangle kind of pattern here in case we broke out below. We still have not put anything much higher, but we're definitely basing in front of that level. So this could be a breakout to the downside. Although I have it here as a demand reversal trade, this is what's it doing the more time it stays down there? Well, it's eating up buy orders. The more time it stays down here, it's eating up buy orders. So eventually, when it breaks below, this could be a good opportunity for a short. At least down into here. So I'm going to need to make sure that my reward to risk fits, but keep that area in mind today. The pound, the yen, nat gas, and copper. So in the pound and the yen, we have this little setup in the pound earlier or last week, I had talked about potentially a short on a breakdown below this area here in the pound. So we got a really nice little move out of it. And now, overall, still a net seller in the Great British Pound. Let me make this a bit bigger. Still a net seller. When I move to a 4-hour chart, I'm in a very strong downward move. We've come back to an area that could be a support area in here. I would look up here on the 4-hour for a potential reversal trade if we make it back up to here. I'm not sure that we will, but if we make it back up to here, this to me is a pretty good reversal opportunity, right? This 4-hour chart, as my friend Sam Evans calls it, the Goliath chart, right? This is the big one, the one that's important. I'm a huge fan of that area up above if we can make it back to that level. Not to say that we will. Japanese yen, we still have a level way up here. Still a net seller overall in the yen, but there's no strong reversal candidates up above me, right? When I come in, I've got this little area here, actually, that I think is kind of a nice little area. Put the right drawing tool on. So this area right in here is a potential reversal point. We've kind of come close to it once. So just keep this area in mind today. See if we get a little bit of a reversal off of this. This may be one worth taking a flyer on. It's a tiny little area. That may be one worth taking a flyer on. That's kind of a shallow retracement during a pretty deep move down. And your target on something like that would be right down in here at about 88.31. So this would be a quick little kind of an intraday opportunity. But remember, your probabilities are going to be a bit lower. I mean, that's a tiny area. And when I go down to, say, a 15-minute chart, which is really where you'll see it better, there it is right there on the 15-minute. So now this is right around the close of the market yesterday. So not the best time of the day for a level to be formed and created, but still one worth at least taking a look on. And if your risk tolerance allows it, you can maybe take a flyer on it. Nat gas, I've got a level set up here in Nat gas. We came really close to it yesterday, didn't get in. So we converted that actually to a confirmation style entry. Because we came so close to it and didn't get into it, it moved over to a confirmation style entry. So now we'd wait for price to come in. Halfway in, it would convert to an entry as it comes back down out of the level. So went a little bit longer this morning than I expected to, but since I was gone yesterday, we were able to dive in and really spend a little bit more time. So hopefully some of these levels make sense to you and you're interested in learning a bit more. One of the things that I think is interesting is some of these levels are getting pretty wide. And as a futures trader, the wider those levels get, the more important it is for you to control your risk. And that doesn't mean that I just keep going to smaller time frames to shrink my level. Sometimes it means I should trade the option around the level instead of trading the futures contract. And so if you don't know about options, go to tradersarmy.com. We've got a little bit of information on options. We're actually doing a live options class coming up in January in the Houston area with myself, and we're going to have a special guest instructor that's going to join me. I'm going to announce that a little bit later. But if you're interested, go to tradersarmy.com and learn more, or send me an email, support@tradersarmy.com. Hope you guys are on a great day.